Hi folks, this is your host Mandeep. It is Thursday, July the 23rd, and I'm doing another video today, which is basically going to be focused on the bigger picture. So let's take a look at some of the charts on higher time frames. So a lot of the trades that I kind of call out during the day or some morning recaps that I do are more focused on specific trades that are I usually take on the 15-minute chart or the 10-minute chart. But here I want to take a look at the bigger picture. So if you look at SPX, and this is the major channel with the low drawn from the low of 2009, and as you can see here that it's actually it's a pretty well defined channel, and when we took this out a couple of months back, we had a pretty significant correction. It was also the start of the coronavirus, and then we overshot to the downside, and then we've corrected back, and we've reached almost the high end of the channel again. So it makes sense to look at this from a weekly perspective. So here you go. So at this point in time, we have a little gap that was formed. This is the low end of the gap, this is the high end of the gap, and the low end of the gap is also coinciding with the channel. And at least from a weekly perspective, we had this shooting star or inverted hammer, which is also bearish, but it doesn't confirm anything till we take out the low end of that and see some follow through. But either case, it's time for at least for the traders to be a little bit more cautious. So if you've had significant gains, it wouldn't be a bad idea to trim some, and then wait for a pullback, and then you can invest back again. At least that's what I'm looking at, and you can decide based on your time frame and the trading methodology that you have. So now let's take a look at the cues, right? And I talked about this as well in some of my weekend videos. So this is again the big channel, the dominant channel, and for last 3 weeks we've been trading outside of this channel, and then this is a more recent channel that you can look at on a daily chart. And so we've been stretched for quite some time, and now we've had a little bit of a correction today. Now whether this turns into something a little bit longer term or a pullback that lasts a couple of days, only time will tell. But at least from my perspective, I'm a little bit short. I have some uh, Q put spreads that I took today, and I think those are out into a month out at least. So this is something worth keeping an eye on as you trade. Now let's take a look at the NDX chart as well, and you will see a similar pattern that seems to be forming, where it was trading in this well-defined channel, and we had a slight break today, but that doesn't mean there's any kind of a confirmation, because we had a little break here as well, and the market you know went back into the channel and traded higher. So we don't know for sure, but these are kind of points in the roadmap that you just need to be aware of. Finally, let's take a look at the VIX chart, right? And the VIX chart has also formed what's called a descending wedge. And usually these descending wedges resolve themselves to the upside, right? So after the correction that we had, which is when the coronavirus became the big pandemic, so this is traded in this sort of wedge since then, after the market actually started to move up. The VIX has been gradually going down, but it hasn't really taken out this level at 22. So I'd be watching this level, and I'm also long some VIX calls, and those are out into October as well. So those are the positions that I currently have. So I'm a little bit on the bearish side, but if the market goes against me, then of course I will take those out, because that's the way I play the market. And this is a look at the IWM, and this is also trading in a ascending wedge, and ascending wedge also tends to be a little bit more bearish, right? So we'll see how this pans out, or it is possible that we continue with the sector rotation in the market as market corrects itself from growth stocks into value. Also, let's take a look at some of the stocks in the FANGMAN list. And as you can see, we had a really nice trade in Apple, uh, which basically began at 280 and it closed today at 375. So roughly 100 points in profit on this trade. And Apple has traded in this dominant channel for quite some time. It broke this channel today. So whether it's a start of a bigger pullback or it's short term, that only time will tell. We'll also take a look at Tesla. And so Tesla had been trading inside of this channel, and it broke out and went on a tear, and now we had this big outside day today, which is a bearish sign. So we'll see how this works out. Again, for me, I probably look for a pullback into the 1400 area before I trade this. But again, from a shorter term perspective, I'll trade whatever opportunities the market gives each day. And finally, let's take a look at Google. 1582 was the high point, and this was top of a gap from the past. And once we had taken out this gap, we sustained that for several days. So this is what I'm looking at, about 1480 level for a pullback on Google. So that's the way I'm viewing these charts. So just wanted to share it with you. I hope you find them helpful. I'll talk to you in my next video. Take care. Bye-bye.